versus 22 billion expected. I mean, that's certainly a beat, right?
It is a beat, but if you think about the buy-side whisper number that everybody was talking about, 23 billion, some even saying a little bit higher, so it's not a massive beat. That was the big concern going into this earnings report as to why we saw the stock drop 3 days in a row. There was concerns that the magnitude of the beat wasn't going to hold, and you had some profit taking leading up to it. Could be contributing to the 3% drop that we're seeing right now. To your point, that 24 billion, it's still strong, especially for Q1 guide, but it's not the same type of caliber that we've seen in the 2 previous quarters.
All right, Pat, want to get your reaction to the numbers that we do have so far with a beat on the top and bottom lines, beats for data center revenue, beats for auto, and to John's point, it looks like better than expected, or at least stronger fiscal first quarter revenue guidance as well.
That I expected a beat, and that's exactly what they did. And, you know, it's kind of a double-edged sword when you see availability getting better. Which is, hey, I can probably get more cards to you that you need, but you lessen pricing power. So very positive on that. And I think, you know, again, the size of the auto business in the range it is in the 200 million-ish doesn't make an overall huge statement, but it is a good sign for the future of what they need to do, whether it's 2, 3, or 4 years down the road.
Gil, looking at data center specifically, it looks like the number came in at 18.4 billion for Q4 versus 17 billion expected. And of course, that's what you need if you're going to get revenue beaten by $2 billion. Is you need strength in data center. What does that say about the continuing data center demand, and maybe about the other areas, including gaming as well, which you said would be a little difficult to parse out?
Right. So the fact that the number is so high and that they guided for an even higher number next quarter is a reflection of what we heard from the hyperscalers on their conference call. We heard from Amy Hood and Microsoft. We are accelerating our purchasing. We heard from Mark Zuckerberg very specific goals about the amount of GPU he needs. We heard from Amazon that they're finally getting access to supply. So that demand is still ramping through the year, and that's reflected in these numbers. I would just say Christina did a very good job reporting that the whisper number on the buy side was so much higher than the consensus number that because they didn't quite get to that number, maybe the stock isn't showing the upside that it would ordinarily with this kind of result.
All right, we're going to go back to Christina. We're not going back to Christina. Pat, I'm going to go to you here because just looking at first quarter fiscal 2025 outlook here, in terms of margins, GAAP and non-GAAP gross margins expected to be 76.3, between 76.3 and then 77% respectively, plus or minus 50 basis points. Just walk me through the importance of gross margins as we do look to another year for this company where the expectations have been so strong and where, interestingly, the stock is now trading up about 1%.
Yeah, so NVIDIA's had pricing power for the past 18 months, particularly on its new line. When you can't get it, you can essentially name your price. And a car that would normally go for $20,000 being sold for $40,000 and even more on the open market, it's great. On the flip side, your cost of goods sold from folks like TSMC and the folks doing the high bandwidth memory are charging more. But net, the margins look incredible, and I'm glad to see there wasn't necessarily a movement down that you might expect as supply from TSMC wafer and packaging improves. So it's impressive.
Gil, in a way, it's remarkable that the move that we've seen in NVIDIA thus far, was initially lower. Now it's fractionally higher. And of course, you've got to wait for the conference call for all kinds of color. Executives will have a lot to say as the afternoon commences. But this is a stock that the options market was expecting to have a dramatic move. And so, in a way, Gil, it seems like modest moves based on these strong numbers might be a win for NVIDIA.
Yes, and I would say that as we start looking towards the conference call, what we're really going to be listening for is commentary about 2025 and 2026. I'd say on the last conference call, Mr. Wang did a good job of talking about the vision of why he sees the cycle continuing for a couple more years, as Patrick reflected. I think there may be more of a need for him to be specific. Orders coming in for 2025, maybe levels of backlog. That's what we're really going to be listening for to justify another move up from here, because the multiple is only low if you think there's positive growth in 2025 and 26. So that's where a lot of the discussion is going to migrate to, especially on the conference call.
Okay, Christina has more from this earnings report for us. Christina Parts-Nevelet.
Yes, I was just quickly going through the CFO commentary, and you guys bring up data center revenue. Data center revenue did climb 38% sequentially, so quarter over quarter. And a big portion of that data center revenue actually does come from China. Previously, the company has said about 20%. So in the CFO commentary, they did say data center sales to China declined significantly in the fourth quarter due to U.S. government licensing requirements, something that we already anticipated, but points to the strength in demand if such a strong portion of that pie was weaker, and yet they still managed to beat 38% quarter over quarter, an increase for data center revenue. So that's seen as a positive. There's no other mention of China in the entire CFO report, but I'm sure there'll be more on the call.
Interesting. Gail, I'm going to go back to you on that, since I did ask you about China earlier, and the fact that they do seem to be offsetting that sales pipeline that was going to China now to other what's the word I'm looking for, to other customers. What that tells us about the demand picture versus production, I guess I should say, versus demand versus the supply, and how they keep up with it.
Well, that's right. There's more than enough demand right now, so the shortfall in China isn't as important. Longer term, the Chinese market is incredibly important, and there's a lot of dynamics at play. The fact that we are limiting chip sales to China is one of the reasons they're limiting the sales of iPhone in government agencies. So we have to see that change. The Chinese aren't very happy about the fact that the government is making NVIDIA sell them inferior chips. That's not something Chinese want to hear. So again, I would look at sales to India, sales to Singapore, sales in gaming as being proxies for those chips still making it into China right now. Later on, there's going to be a solution that's acceptable to the U.S. and the Chinese government. Right now, we're probably getting chips into China in an indirect fashion.
Okay. Christina, Gil, and Patrick, thank you for joining us.
Thank you.
Up next, much more on NVIDIA's big report, what these numbers could mean for the mega caps and the broader tech sector in the months ahead. That's after this quick break. Overtime, we'll be right back.
wealth.
We might get that big move that the options market was looking for after all in NVIDIA. Shares of NVIDIA now higher by about 6.5%. It's not the only one. Some other stocks moving in sympathy. Supermicro, the performance hardware maker that uses a bunch of their chips, is up now 10%. AMD up about 3%. ARM Holdings up about 5%. Joining us now to discuss NVIDIA and the ripple effects that we do seem to be getting, at least in overtime. Byron Dieter, partner at Bessemer Venture Partners. Byron, welcome. Good to see you again. I was just talking to an entrepreneur today who's about to announce a Series C, which I think you might be involved in, where that money is going, and part of it is going to accelerator chips. Maybe that helps to explain how NVIDIA has managed to beat these already high expectations.
Thanks, John. Great to be back, especially in this fun day in tech. And indeed, one of your prior guests called it hype. I call it market demand. This AI wave is real, and it's fueling a tremendous pull-through of real spend.
So what about, though, the predictions from the CEO of Databricks, the CEO of MinIO as well, that these accelerator chips are going to get cheaper, that there's going to be competition that comes in, brings prices down? Do you buy that, or is NVIDIA so far ahead with such unique technology that it's going to maintain pricing power and volume growth?
A little bit of yes and yes. I absolutely believe that the demand is there and increasing. And so what Ali was commenting about was specifically the supply trends that he sees coming as the hyperscalers, AMD and Intel, and dozens of pure play startups come in to try to compete for this GPU market. And so that's entirely a game on how fast can they innovate, how can these challengers emerge, and can they eat into this dominant market share that NVIDIA has maintained. Right now, they've maintained a majority of the AI processing market share while this space has grown at a massive rate, and it's been impressive to watch. People have been expecting perfection from them, and frankly, they basically delivered that again today.
Yeah. I mean, just to feed off of what you just said, I mean, the fact that NVIDIA is up, but AMD is also up. Intel is also higher in sympathy here. How much does that speak to how quickly this market is growing and outpacing, to your point, that the demand is outpacing the supply, and even as competitors do start to move to come online?
Yeah, simply put, the artificial intelligence wave is the next big trend in software. It is this next horizon in cloud computing, and it's going to continue to pull through massive demand for many years ahead. These software companies aren't building their own stacks in the vast majority of cases, and so they are dependent on these hyperscalers and infrastructure providers to power this revolution. And so the demand curves that we see within the private sector, which is the leading indicator to the pull-through of these chips, is just building. The big question out there and what people are trying to anticipate is how will these new entrants come in and start to compete for delivery. And so that hardware battle is on, but I can tell you with very high confidence that the iceberg under the surface that people can't yet see of software companies building in the public markets, private markets, soon be public markets, is unstoppable. There are hundreds of high-quality venture-backed companies that are emerging now that are starting to build up real scale.
And Byron, that's what people often miss. It seems to me, when you're talking about a chip company, hardware companies, the moat that they have is often defined by software. And NVIDIA develops a lot of software, has been investing in a lot of software companies. What might we hear from Jensen Huang on the call and later tonight that explains how that moat continues to develop?
Yeah, I mean, they're building moats in several ways. Software is certainly one, the raw chip capabilities is another, and frankly, their ecosystem is a third. You see them extremely active in venture investing themselves as they're getting these leading companies to bet on their stack as they scale up. And it's extremely clever. They're trying to take what is a short-term market share game advantage with a supply shortage and turn that into long-term sustainable competitive advantages. It's hard to do in hardware, but they're very strategic about how they're going after it, and frankly, they've got a pretty compelling chance to pull this off because you see these dependencies starting to roll through into the software stack.
So we talk about the picks and shovels. We talk about NVIDIA as sort of the first player in the market and the first real major realizer of monetization of AI. We talk about some of the other names on the hardware side, like Supermicro, that have seen major moves in the public markets as well. When we start to shift over to software, especially if you talk about hundreds of players in the space on the private side, what are the names that are going to be the next big movers as this starts to transcend the monetization of this into the software side?
Well, I think there is that shortage of names to bet on in the public markets, which has created the scarcity effect also for stocks. But if you look one layer down, people are absolutely starting to focus on the private side, and some of the big horizontal providers like a Canva that's integrated AI beautifully into their suite and is building scale. There's pure play vendors like a Perplexity that are horizontal, going after Google's core search powered by AI. There are vertical AI companies like an Even Up in Law or Service Titan and Field Automation that are rolling this in, and they're getting into hundreds of millions or billions of dollars of scale already. The most watched IPO of this year will probably be Databricks. There's a lot of speculation on if and when they may go out, but they're challenging Snowflake head on, and they're benefiting from this re-acceleration that the AI pull-through is causing. And so there's dozens of these high-quality names worth billions of dollars in the private markets that people are going to start to see turn public over the coming quarters.
Okay, Byron Dieter, thanks for joining us. The shares of NVIDIA now up 6%, and as you can see on your screen, quite a list of names both on the semi side and on the software side, publicly traded, that are higher in sympathy.
Thought there might be.
Yeah, we're kind of planning on that. We had a whole list we've been watching. Well, up next, your earnings roundup. A parade of results hitting the tape this hour. We're going to bring you a scorecard of all of the key numbers and stock moves.
Plus, Lux Capital's Josh Wolf is back. He'll tell us how he thinks today's NVIDIA results could impact the AI trade going forward. Over time, we'll be right back.
Dreams. Welcome back. On the heels of that blockbuster NVIDIA report, let's take a look at some other key movers here in overtime. Shares of
Rivian, well, they could use an accelerator. The company posting a larger than expected loss. Vehicle production guidance was softer than analysts expected. On the flip side, take a look at shares of Synopsys. Shares moving higher by about 3.5% after reporting a beat on earnings and revenue in line with estimates. Guidance coming in stronger than expected, but Morgan, it's really still all about NVIDIA this hour, isn't it?
It sure is, and that is the big story of the hour. It's the big story of the afternoon, of the day. NVIDIA shares still popping here on overtime. You can see that spike right there, up about 6%. Lux Capital's Josh Wolf will tell us how he thinks this will impact the AI trade in a CNBC exclusive. That's coming up after the break. We'll be right back.
My revenge will be success. You told Maria Bartiromo that you may campaign in the Bronx or at Madison Square Garden. When might that be happening? Well, very soon. Look, we have 9 months yet, but I'm going to see about Madison Square Garden, and we're going to go to the South Bronx, and we're going to go to Queens and other areas, because if you look at what's happened in New York, I'm not even blaming the mayor. I think the mayor has been told to take a back seat a little bit because they came after him violently. You know, they came after him like they're going to indict him when he started speaking up, and now he's become quiet. My revenge will be success. Nobody can believe what's happening with the people. The angry people that would have never voted for the Democrats. If parents would never have been voted for Democrats, I think they're going to vote for me. So I think we're going to give New York a heavy shot. They're very unhappy in New York, what's happening. And they're unhappy with the crime. Take a look at the crime in New York. It's at record levels. The other thing is, and very important, is I think Jersey can do that. I think that Virginia can do that. I think that Mexico can do that. And I think Minnesota can do that. And I'm not even trying everything yet. Trump has become a tremendous success. I think like states like New York and New Jersey is going to do a rally in the South Bronx. I think it's I think of one thing Madison Square Garden. I think you have just changed a lot in the last 2 years.
Welcome back to Overtime. NVIDIA shares in the green, beating on both lines, beating on data center revenue. For more on NVIDIA and its impact on the AI trade, let's bring in Lux Capital co-founder and managing partner Josh Wolf. Josh, it's great to have you back on the show on a day where we are seeing NVIDIA, sort of the main player when you talk about so-called picks and shovels of generative AI. You're seeing them report earnings that are up 769% for income year over year for the quarter. It speaks to how quickly and how aggressively AI applications, or I guess the ability for infrastructure for applications, is being adopted. Walk me through it.
Well, it's interesting. It was probably 8 years ago, I got a preview of NVIDIA becoming the soul of the new machine. We were investors in a company called Zoox. Amazon would buy these guys. And I was like, what are these guys training these new machines on for autonomous vehicles? And they said these new NVIDIA chips. That was when NVIDIA was a $15 billion market cap. At the time, Intel was a $150 billion market cap. You fast forward to today, over $1.8 trillion, just absolutely incredible. I do feel, though, right now you're seeing a flood of retail investors start to get excited about NVIDIA. They're probably 5 years too late. I always say that you want to be today where you should have been 5 years ago. You have a dynamic where $1.8 trillion market cap against Google, roughly $1.8 trillion market cap. They're generating 60 billion of revenue. Remember, Google is generating 60 billion of cash flow. So I would just say it is real. The infrastructure build out is serious, and it is also a time for caution and not to see this as like some crazy meme stock. This is being, in my sense, overbuilt right now, which will be massively deflationary for many of these AI chips.
Interesting. Okay, so when you say 5 years too late, what, especially as a retail investor, I know you're focused on the private market and VC venture capital specifically, but when we talk about 5 years too late, what would be right on time right now?
You know, it's really interesting and almost a little bit contrarian. Everybody is racing to the future right now. And, you know, it's a time when rates have risen for the past 2 years. When rates are rising, it flips the dynamic that we saw for the past 10 years, which is low rates are like a tractor beam for the future. They are pulling far out, fanciful ideas that are maybe 20-year things into these 20-month frenzy projects. Now with rates rising, a lot of entrepreneurs and a lot of venture capitalists, you have to ask the question, have you learned the lesson of the past few years? I know we're in an election year. I know the White House and the Fed want to create a wealth effect, want to fight inflation. These two things are sort of incompatible. I actually think that the contrarian thing to do right now that people are going to realize 5 years hence is not race to the future to fund space elevators and fusion and all kinds of crazy stuff that we ourselves love to fund, but we like to reduce that gap between science fiction and science fact. Right now, we're obsessed with the theme of maintenance. You think about CapEx. There's two parts of CapEx. There's growth, which everybody's been funding, and maintenance, which nobody's funding because nobody wants to think about the trillions of assets that are there right now that should be fixed. That's in defense, that's in biotech, that's in infrastructure, that's in artificial intelligence specifically for the open source software systems that need to be maintained by the likes of companies like Hugging Face and Together Compute.
Josh, I know a lot of VCs would love to see that this NVIDIA thing is overdone because so much of the money that they're giving to these startups is having to be spent on accelerators and compute. But what if NVIDIA is actually able to maintain this lead they have and if the nature of the data center has fundamentally changed?
Well, remember what, John, you make a great point. What any one company does individually is rational. Facebook building out, Microsoft building out, Google building out, NVIDIA building their own clouds, lots of other providers trying to give you compute access through NVIDIA chips. What happens, though, collectively is it's irrational. And there has never been a boom where we haven't seen something get overbuilt. So I was a massive bull on NVIDIA going back 8+ years ago. And I'm not a bear, but I just think it's a time for caution that what can't go on forever will eventually stop. And I do think that this is going to end up being deflationary. I think lots of other companies are looking at how do we take AMD, pair it with new languages like Python to take on NVIDIA and CUDA and give people alternatives. So I would be more interested at the moment in AMD over NVIDIA, but I do think NVIDIA's got a pole position. There's going to be a lot of alternatives. Again, you look at something like Together Compute, massive distributed computing, doing it way cheaper.
That said, it seems like we're in a period where AI accelerators, where these chips are the currency of the future, and all startups need access to them in order to build the kind of lead that they're going to need in their respective industry that they're targeting in order to pull ahead. Isn't that the case right now?
It is, and again, do you need OpenAI plus Anthropic and Claude plus 10 other large language models? Many of these things are going to see a winner takes all, and the massive amounts of money that they're raising, we're talking billions of dollars, and you nailed it. A lot of that money has been and is going to NVIDIA, but I think that starts to level off. What's really interesting to me is the next wave, and that's not going to be just large language models. That's going to be in robotics. I can tell you that there are some really cutting-edge teams right now coming out of the likes of OpenAI and DeepMind and elsewhere to focus on AI for robotics. It's a totally different infrastructure that they're going to need. Same thing for biology, automated wet labs and robots doing scientific experiments. That, to me, is the near-term future of maintaining the cutting edge for both biotech and for AI. Then you talk about defense, and you're still going to see a huge amount of AI in defense, but specifically around maintenance.
That's exactly my question for you, Josh, because you did also just publish this letter today. Two of the names that are trading higher in sympathy with NVIDIA are Palantir and C3AI, which both contract with the Department of Defense. So the fact that you use the B word, bubble, where defense tech is concerned, what does that say?
Well, again, I always like to be early to things, and sometimes being early is the same thing as being wrong. I know that, okay? But in this case, defense, it has all the hallmarks, not today, not in the next 2 or 3 years, but in the next 4 or 5 years, it's going to be a bubble. Why? You have companies like Anduril and Saildrone and Hadrian. Hadrian just announced $118 million Series B. These are all Lux portfolio companies. We're super proud of them. They're rebuilding the arsenal of American democracy. What happens next? Copycats try to follow. They look at them as proof positive. Hey, those guys just raised a lot of money. Their valuations are increasing, tens of billions of dollars, revenue coming in, billions of dollars in bookings. We can do the same thing. What happens next? Investors follow, then fund of funds. And the fund of funds thing is interesting because you get a moral layer where you're disconnected from some of the ESG concerns of being involved in coaching. That's something that we as investors had to say, are we comfortable with that? So I think you're going to have a flood of capital coming into defense. Eventually, it's going to be a bubble. We're 5 years away from that.
All right, Josh Wolf of Lux Capital. Always great to have you on. Thanks for joining us.
Great to see you both.
And NVIDIA now up 8% in overtime. Coming up, we're counting you down to the calls. NVIDIA and SSE among the many companies kicking off their earnings calls at the top of the hour. What we'll be listening for is ahead when overtime returns.
Oh, motherfucker.
Humanly possible.
NVIDIA shares surging. We're now at session highs of 8%
Ahead of the call, NVIDIA saying generative AI is at a tipping point. We'll be right back. Jim.
Welcome back to Overtime. NVIDIA, it's now 9%. It is just moving higher ahead of the call. But believe it or not, we have now officially been saying, welcome back to Overtime for an entire year. John, you and I have been at the helm for the show for 1 year. Happy anniversary to my work husband and partner in crime.
You talked about playing time of your life and doing the dirty dancing thing, but we don't have enough time. That doesn't.
Fast Money begins right now.
And happy anniversary from us to you, live from the NASDAQ market site in the heart of New York City's Times Square. This is Fast Money. Here's what's on tap tonight. All eyes on NVIDIA. Shares of the chip giant erasing early losses, now up strongly, about 10%. Revenue and profit coming in better than expected. And data center sales more than quintupled from a year ago. Did the company just silence all the skeptics? We'll debate that one. Plus, Bezos' billions, the Amazon founder selling around 50 million shares of the e-commerce giant in just the last 2 weeks. Zuckerberg, Gates also selling lately. While these sales have been planned, could they trigger other insider moves? We'll break it down. What are the signals here? And later, our big short trader set to tell us where he's actually long in this market. What's behind his bullish bets right now, we'll find out. I'm Tyler Matheson, in tonight for Melissa Lee. Coming to you live from Studio B here at the NASDAQ. On the desk tonight, Dan Nathan, Guy Adami, and Danny Moses, founder of Moses Ventures. Welcome, one and all. And we start with that massive move in NVIDIA. You're going to hear that name a few times here. Bet the over on this one. Shares are surging after the chipmaker posted record revenue, a whopping 265% increase from last year on the strength of its AI business. Now, the news sending shares of other chip makers like Supermicro and AMD much higher in after hours as well. The conference call for NVIDIA just started, and CNBC's Christina Partsinevelos has the numbers and has been monitoring the call. Christina.
Well, the call just started, so I'm going to get on it as soon as we finish this. But NVIDIA is surpassing expectations. Yet again, a lot of it, though, is driven by data center revenue. It's bread and butter, which grew 38% quarter over quarter to $18.4 billion. Large cloud providers represent now more than 50% of that data center revenue, with NVIDIA saying in their report that demand is growing among other verticals, including auto, financials, as well as healthcare services. All sectors, though, for NVIDIA, revenue did beat. Auto is the only one declining year over year, but what's so impressive is gross margins coming in at 77% for the fourth quarter, which speaks to its pricing power. What's interesting, though, is NVIDIA was still able to grow data center revenue, even though the CFO commented in her statement stating that, quote, data center sales to China declined significantly in the fourth quarter due to U.S. government licensing requirements. She never used the word significantly before. China contributes about 20% of total data center revenue, so it declined quite a bit, and NVIDIA was still able to post a 38% quarter-over-quarter growth, speaking to the strength and demand from other markets. So once that news came, that's when we started to see the stock really switch gears. In the press release, Jensen Huang also saying that generative AI is at the tipping point, implying increased demand still lies ahead, and pretty much reassures confidence in this AI trade, which is exactly what investors were looking for heading into this report. But we knew the options market was pricing an 11-point swing. What are we at? 10% now?
Yeah, there you go. 10% right on it. The company clearly hitting on all cylinders in the most recent quarter and looking for bright skies ahead. Christina, you'll keep us updated on any highlights from the call. We'll be back to you, I'm sure, several times. Let's kick this one around a little bit, shall we, Guy?
Well, gross margin stuck out to me. I think 76%, 77%. So good for them. I mean, listen, great quarter. There's nothing not to like in terms of the quarter. Here's what I'll say, and people are going to at me on Twitter all night long. But the magnitude of the guides high, which they continue to do, become less and less. At a certain point, one has to wonder, what's the right price to revenue? Right now, if this company is trading at $1.8 trillion, which is probably where it is at $740, you're talking about a company that's trading either side of 18 times revenue, which in this world is expensive. Now, people will say at this growth rate, they will grow into this valuation at some point. Maybe. We'll see. But, it is an expensive stock on that metric alone.
Danny?
you traded this valuation, you better beat and guide higher, which they did. But at some point, this secular trade becomes cyclical. And I distinctly remember 1999 and 2000 when fiber optic was the big craze. And yes, there was a need for it, right? We were growing lasers and everything. But at some point, the secular trade becomes cyclical, and you can't maintain these margins over time. But the stock to trade down like it did in the aftermarket quickly and trade back up, 1.6, 1.8 trillion. I don't think it matters what the market cap is.
Can you, that's what we were talking earlier, can the law of large numbers make the future harder for this company?
For sure. At some point, the margins.
It gets so heavy.
Sure. It's a great company. They're in a great space. I would never short the stock at these levels, but let's see what happens.
It's getting ready to be a pretty decent short. I tried doing it a couple times last year, and that did not work out medically. Well, I'm just, and again, I never thought we'd see the sort of magnitude or the consecutive magnitudes of the beats and raises that we did. And so a quarter like this is clearly a great quarter. When I look at really what was expectations for the guide right here, consensus was for the current quarter that we're in, about $22 billion in revenue, okay, and about a little less than $5 in earnings, and they guided to 24, so that's up 9%, okay, in the quarter. But some of the whisper estimates were the buy side. This was in print. These were like brokerage houses that talked to a lot of these buy side accounts. They were expecting maybe 24 to 25 billion. So the guide came in below the whisper. So when you look at this sort of price action in the aftermarket, and this is obviously a massive stock, big pools of capital are not trading right now. Okay, so we had this swing.
So do you depart from what a guy said a moment ago? There's nothing not to like in this report?
No, there's nothing not to like other than expectations, right? So that, like, we talked about this a little bit last night. So if you're a hedge fund, right, and you were expecting maybe a guide to 24 or 25 billion, and they guided to, maybe just about 24 billion, you're going to expect them to beat that if everything continues to go. But are you buying the stock here right now? And I think not. So let's see how this stock trades. Where it opens, it's going to open up 10% most likely tomorrow. Okay, shorts are probably covering in the aftermarket right now. Let's see if big money is going to come in and buy this stock. I think big money probably sells a little bit because of what Guy started out by saying. The magnitudes of the beat are getting smaller.
It's amazing to me that the stock price creates the narrative. To Dan's point, if the stock was down 10% right now, it would be, oh, they beat and got it up, but it wasn't enough. You didn't get enough. But because it's up. So the difference in a 1.5 or 6 trillion and 1.7 or 8 trillion market cap here, to me, is meaningless. I know it's a lot of $300 or $400 billion. It's a lot, but to me, it's just the narrative.
So, are we talking about that law of large numbers when you said the magnitude of the gains is slowing a little bit?
Well, that's just factually true. Yeah. I mean, the magnitudes of the gains are slowing. I mean, it was 3 quarters ago now. I think they went from a 7.8 billion to an 11 and change billion dollar guide. I mean, you can do the math. So yes, in percentage terms, the magnitudes are slowing. The question I guess you have to ask yourself in this sector, which is a highly cyclical, at least historically, at 19 times ish revenue, 18, let's just call it 18. That's historically an extraordinarily rich valuation. Now, the people out there will say, you know what, Guy, what you're missing is they're going to grow into this. The TAM, the total addressable market, is such that they can grow into this very easily. That might be true, but you know what else is coming down the pike? Competition as well. So you see 77% gross margins. A year from now, are we talking about the same gross margins, or are we talking about competition coming into the space and those margins contracting? Those are the questions you have to ask yourself instead of just, I would say, just blindly saying this is a secular story that's going to last forever off to the moon.
Remind me where this stock was a week ago. Is it in the high 700s?
725, 730. I think in the after hours today it traded down to 640. I think if we open here, I don't know what here is right now, but we're effectively at an all-time high. So, yeah, I mean, we've done a bit of a round trip here.
Yeah, you've come back, recouped what was lost from the last week.
And the all-time high was 746 just the other day, on Friday afternoon. And listen, I'll just say this. Guy just mentioned competition. We know that it's coming. That's one of the reasons why AMD has doubled over the last kind of 4 or 5 months or so. This is a company that has 53% gross margins compared to the 77 that just printed. If they have a product that's almost as good, okay, as these high-end GPUs that, basically NVIDIA has 90% market share right now, how do they compete? They compete on price, right? And we know that a lot of their customers, NVIDIA's customers, okay, it's Microsoft, it's Google, it's Amazon, and it's Meta, make up 40% of their sales. At some point, we talked about this last time, every day we see a new story. Microsoft wants to diversify away, right, from this reliance that they have on NVIDIA. And AMD is going to start competing on price, and then NVIDIA is going to like start lowering their price. Then the supply-demand dynamics, okay, like the supply constraints that they keep talking about are going to ease up a little bit. They may end up having a glut, okay, and then this becomes a bit more cyclical, and then the margins come down, and people will start anticipating this before it's confirmed in a quarterly report, that sort of thing. So I don't mean to like rain on this parade. It's a great story. I know a lot of folks believe that this is going to be a thing that goes on for years and years and years, and I'll just tell you, at every near, you know what I mean, secular top that these companies or these kind of things are shifting a little bit, that's exactly what people are saying.
Does this stock, before we go to Chris Rowland, does this stock remind you of any other stock performance that you've seen in your career or in history?
Yes, there was one stock, JDS Uniphase, back in 99, 2000.
I remember their name, yeah.
Yes, and it was good company growth, and eventually what happened was people realized that you could take all the fiber that was going to be used, it'll wrap around the world 100 times, that the TAM was too big. It didn't work. The math didn't work. I don't think we're at that point here, but I remember distinctly that was the stock that stopped going up on a beat and a guide higher. I think because the incremental buyer, there was no incremental buyer left of the stock. Maybe not of the product, but of the stock. So that one always sticks in my head from that time.
Very, very interesting. I remember that name well. Let's bring in Susquehanna Senior Equity Strategist Chris Rowland. Chris, welcome. Good to have you with us.
Thanks, Tyler.
Are you in the Adami camp that says there's nothing not to like in this report?
It was solid. It was right down the middle. I think somebody referenced some buy-side surveys. We were in the exact same place. We were thinking they needed 24 and a half on the guide, and so they were right there, dialed in.
Right on the button. Is there any rain, to pick up on Dan's metaphor there, is there any rain on this parade that you can see?
I mean, if you really want to nitpick, you can get into OpEx being a little higher than we had thought, but, you know, this is AI. I'd rather they overspend than underspend, and they are doing so.
Your price target is now what on this stuff?
I think we're at 850.
At 850, and it's a lot closer to 850 now than it was 3 hours ago, right?
True, but again, Tyler, this is right down the middle. We would have expected a little bit more of a flat stock here. Maybe give them a little bit for gross margin, but that's probably it. So we think it could be muted from here.
A little bit muted from here. What does that mean in practice?
A muted reaction from here.
I see.
Yeah, overall.
Any questions?
Yeah, so Chris, let's talk about those buy-side expectations and whisper numbers. And I think some of our viewers who are probably not as in tune with this, right? So you have the consensus estimates that, you know, is basically compiling all the analysts like yourself and what their estimates are for a quarter or for whatever metric, right? And then you have the buy side, the people who are the holders of the stocks, or sometimes, on the hedge fund side of things, who might be short of the stock. And they have their own expectations, right? Which are usually different from that of the consensus estimates. Where do you think consensus for the whisper world, like you just mentioned, the revenue, it was about 24 to 25. I kept on seeing that from different brokerage houses, so that's why I'm in your camp. I'm surprised to see the stock up 9-10% in the aftermarket, given the fact that they just came in line with what the whisper was.
There was some commentary around continued supply constraints that Collect Press, the CFO, just mentioned on the call. It's unclear whether that's over their existing Hopper generation or the next upcoming B100. But if that is true, even though supply is improving, if there are still constraints, that means we may still have some upside until we reach cruising altitude. And it's really the cruising altitude of these revenues versus buy-side expectations, which I still think are probably $1 to $2 billion a quarter above sell-side expectations that matter.
Let's talk a little bit about the thing that Dan mentioned and Guy as well, and that is competition. What is the competitive risk that this company faces if it does?
Yeah, I do not think this is a commodity product. I know as mentioned they may be fighting on price. I do not think they are going to be fighting on price. This is a highly tuned piece of hardware married with a software ecosystem for AI that's been built over the past 20 years since CUDA was born. And that's not something, that's a commodity. So the hardware, AMD has a really nice piece of hardware coming. They don't yet have that software ecosystem. They don't have the heritage, and it's going to take, as long as half a decade to put a real dent into what is pretty much an NVIDIA monopoly here.
Walk me through the China issue that this company faces with export controls and so on and so forth.
Yeah, it's pretty simple. You can't ship leading edge technologies to China. You can't ship technologies that surpass a certain computing threshold. And almost all of NVIDIA's products that aren't gaming products do exactly that. So they're cut off.
So they're cut off from that. What if that were to change in some material way? What could that mean on the upside for NVIDIA?
They've previously talked about China being 20 to even 25% of data center revenue for them. So this is an adder on top. Again, they continue to be supply constrained, so they don't need that right now. But if they had that supply available, they could potentially upside revenue.
Chris, thank you so much for being with us. Appreciate your insights.
Thanks, guys.
Chris Rowland of Susquehanna. Any trades we want to get off our chest?
Well, huge moat, right? Totally get it. But look at Supermicro. So that stock's probably got back everything it lost today. With that said, and our crack staff and EC can probably pull this up, I think they've just talked about $1.5 billion convertible note due in 29 that they just issued. So, it's interesting to see what's going on out there. You take all this, and I get it. It's a secular growth story. Everybody loves it. Everybody's gotten rich on the back of it. At a certain point, though, certain valuations absolutely matter. As much as we'd like to think it's different this time, as Danny said earlier, it's probably not as different as people think.
All right, any final thoughts here?
It's really smart for companies in the sector, any sector, when their stock prices are elevated to raise capital. It's a smart move. But I want to say one thing for people out there that they understand how sell-side research works. You have two choices. You can raise your price target if you're a sell-side analyst, or you can downgrade the stock, right? And so nobody wants to downgrade the stock on the sell side right now on NVIDIA because it's too great. You have tons of momentum around it. But what is the validation for continuing to raise your target on a metric potentially? What is a multiple revenue? Is it future earnings discounted back? That's what I'm going to be looking for.
All right, let's leave it there, but not for the last time in this hour. We'll come back to NVIDIA as Christina monitors the company. Meantime, stocks are staging a late-day rally today, the S&P and Dow, managing to end the day in the green, eke out small gains, as you see there. Then the NASDAQ did post a third straight day of losses, but finished well off its lows of the session down just a third of 1%. Meanwhile, Treasury yields were higher after this afternoon's 20-year bond auction saw weaker demand than hoped for. The 30-year touching 4.5% at its highs, while the 10-year rose back above 4.3%, as you see right there. Rates maintained their gains after minutes from the latest Federal Reserve meeting showed central bank officials have expressed caution about lowering rates too quickly. Let's get to Steve Leisman to wrap it all up for us. Hi, Steve.
Hey, Tyler, yeah, minutes to that Fed January meeting show most officials still highly concerned about inflation, worried about cutting rates too quickly, and this was weeks before that upside inflation surprise in the January CPI data. The minutes showed officials emphasizing the risks of cutting rates too quickly and concerned that inflation progress could stall, and also seeing an upside inflation risk around every corner in strong demand, in loosening financial conditions, and even in geopolitical risk. Only a handful of committee members, if that, showed much concern at all with a recession, and that brought some criticism from Wall Street, Oxford Economic Writing. The odds of a policy error appear higher following the minutes. There is significant disinflation in the pipeline as the central bank waits for clear signs that the labor market or the broader economy is deteriorating. It will be behind the curve. The chance of a May rate cut now trading at the lowest probability of the year, just 30%, with more confident bets now centered on June and July for that first rate cut. If the Fed was this hawkish before that poor January inflation data that fiddled out their positions hardened from here, while many Fed speakers note considerable inflation progress, doesn't even motivate them to take any action in response.
It would seem, Steve, that the higher for longer narrative is well entrenched at the Fed and maybe increasingly in the eyes of economists and market watchers.
Yeah, Tyler, there is a weird thing going on right now where more and more I read people saying that the data we got in January was anomalous, that it was just one-time price increases that weren't picked up by seasonal adjustments. And yet, they're changing their outlook for the Fed based on data that they don't think should change the Fed's outlook.
Yeah. Steve, the 20-year auction today wasn't particularly good. I think the bid to cover, the dealers got stuck with the most since May of 21, 3 basis points high. I mean, not a lot to like here. My question to you, I guess, is how closely, if at all, does the Fed watch bond auctions like this?
I think they're watching them. I think they watch them in the first instance for systemic risk. In other words, is there going to be a bond market failure? I think 20s are always a little difficult because, it's sort of an odd man out kind of a tenor right there. It's not the favorite tenor. It's not a 10. It's not a 30. You can't really draw too many conclusions. And also, it's worth pointing out that when these things have done poorly, rates have declined afterwards, and so it hasn't really been that big a loss for those who are caught holding the bag, so to speak, on these bad auctions. If that does not happen to be the case in the future, that's when you might have more risk in these longer-term bonds. But one bad auction, when the government seems to have done a pretty good job placing the papers so far, I don't think is going to ring too many alarm bells.
Hey, Steve, I know you're more of a Fed watcher than a market watcher, stock market watcher, but the last time the 10-year was at 4.31, it was the first days of December, and it was on its way to 3.8, okay? And I just think about this from the stock market perspective. A lot of the juice that the stock market got after that period really came from this notion that the Fed was going to be pretty much lowering interest rates maybe 5 or 6 times in 2024. Are you surprised that the S&P, just below or in and around 5,000 right now, is not reacting a bit more negatively to the fact that rates seem to have an upward bent?
Dan, you stole my only meaningful comment at the end of your remark right there, which is that I have been surprised at how strong the market has remained. I think that's ultimately a good sign underlying the stock market. You're right. I have almost no expertise at all other than watching it for what the economic impact is of what's going on in the stock market and what people think about the earnings ahead. It's interesting to me economically, but I do watch the fixed income market every day. I watch how the bond market reacts to it, or the stock market reacts to it. They have traded together and they've traded apart over this last several months, and I have been really surprised. I don't hear, I don't know, Dan, if you want to kick it back to me, but I don't hear people talking about that the market has withstood this run-up in rates, and to me, that's a sign of underlying strength.
Yeah, I think your point is a really good one. I mean, it really is coming into the year.
Well, what's your point?
Well, yeah, but I mean, I can't tell myself what a great point I made. Thank you, though. But, the expectation that we were going to have, let's say, 10% earnings growth in the S&P 500, everything that you just laid out, right, in the beginning of this is basically saying, well, maybe the economy is that much stronger than a lot of people expected going into the second year in a row, and that is the thing that's caused upward pressure to stop.
I think one thing that we're watching here, and you guys know this better than I am, this is something I'm watching economically, which is how well do companies maintain margin in what looks to be a disinflationary period? To me, the story inside the earnings is that inflation has come down, but margins have not been the big player in that declining inflation. It looks to me like generally those higher margins that companies achieve in the inflationary period, a big chunk of it looks to be remaining right there. We'll see if it gets competed away, but right now that does not seem to be the case.
Steve, you made a great point.
Dan, you made a even better point. Thank you, guys. I appreciate it.
Thanks very much, Steve. Danny, any final thoughts here on Fed minutes and rates? What the market telling what the bond market's telling?
Yeah, so this higher for longer narrative self-fulfills wider credit spreads over time, and that does the Fed's job for it. So to think there's going to be a rate hike, I don't think that's going to happen. And I do believe if and when the Fed does start cutting, it will be aggressive because if there's a reason they're going to start cutting, things are really slowing down potentially.
Does the Fed have to do its cutting, what cutting it does in 2024 before the election?
I don't really believe that. If it was word on 60 Minutes, that's not what he's thinking about. So I'm going to stand with that. But no, I don't think that should be a factor at all in it. Maybe I'm cynical in that way, but I really believe that he's just going to follow the course.
All right, coming up, it's not just NVIDIA on the move, plenty of other after-hours action to bring you in shares of Marathon Oil and APA Corp on the move as EV makers stall out. Rivian getting hit hard, down more than 13%. The numbers out of all those quarters are coming up. And the inside scoop on some insider selling, what the latest C-suite sales tell us about where the market is valued. Don't go anywhere because more fast is coming right at you.
Weird.
Welcome back, everybody. Two bigger energy names reporting earnings in the last hour. Marathon Oil and APA, formerly known as Apache. The stock's moving in opposite directions, though APA had been down more than 3% at its lows. Both companies' conference calls are tomorrow. Pippa Stevens joins us now with more. A tale of two companies here. Pippa?
That's right, Tyler. Well, APA is under pressure following those results, with production in the North Sea down 18% year over year. Now, the company reiterating its commitment to shareholder payouts, saying it returned to 66% of free cash flow to shareholders in 2023.
Looking forward, APA sees flat total production growth. Oil output is forecast to rise about 8%, but that will be partially offset by softer natural gas liquids. On the call, investors will be listening for an update on the Callon Petroleum acquisition, as well as any price forecast for nat gas after that commodity takes tumble. Marathon Oil, though, topping estimates while also reiterating its payout of more than 12% of its market cap. Production did decline slightly, with average realized prices also falling $77.28 per barrel of crude for the period, down from $84.29 in 2022, with unit costs also rising quarter over quarter.
The
company outlined a CapEx plan of 1.9 to 2.1 billion for 2024 and expects production, Tyler, to be flat. Back to you.
Well, thank you very much. Guy, what do you think? Pippa kills it, by the way. It's great that she's on board. No, it's interesting. You mentioned tell two cities, well, energy. That's absolutely the case. I mean, APA has not been good, probably in large part, or in not small part due to natural gas, which has been a disaster. Marathon Oil as well. I mean, both those stocks sort of slogging along. The flip side of that coin is names like Marathon Petroleum, MPC Corp. Look at that. I mean, that stock's effectively at an all-time high. PSX as well. So when you're in energy, and this is important, I think you have to really understand what the components of a lot of these companies are. I'll say this, and I'm sure Danny agrees. The big cap integrated names, Exxon, Chevron, Conoco, they're all just too cheap right here in this environment, given a broader market that's probably trading 21 times, and you have some of these energy stocks, some of them at half the valuation of a broader market.
Yeah, it's looking, you've got to look at energy stock, to the guy's point. You can't just say buy energy in general, but if you look at the sector, the weight now in the S&P, I think, is down to 5% or something. I think just a couple years ago it was 15. I'm not saying it gets back there, but I think they are defensive in nature. The cash returns that are going on the dividends, the buybacks, the mergers and acquisitions that are occurring, and kind of the move away from ESG. We saw a big announcement from JP Morgan, BlackRock, State Street, kind of we're going to do our own thing. I think JP Morgan's probably sick of missing out on some of those M&A deals that are out there. So these companies now are, these are great deals. And so I think whether these deals close or not, the Exxon Pioneer, the Chevron has, I think you can own them all.
And we got another deal to tell you about here. Core Energy to buy Enerplus for about $11 billion in stock, and cash is according to Bloomberg. Enerplus is up after two companies I don't know much about.
Don't look
over this way.
Well, no, I mean, quickly, the thought is a lot of deals in this space. A lot of deals in the space. That's on top of, Warren Buffett now owns 37% of Occidental Petroleum. If it had been any other sector, when he makes announcements like this, those stocks go parabolic. This is a stock called an oxychart over the last 5 years. It's going absolutely nowhere. But clearly, there are people that see value in a space that a lot of people sort of left on the side of the road because of names like NVIDIA. If NVIDIA is going to go 4, 5, 8% in a day, why own energy stocks that might grind along, 0.5% over a week when it can own some of the high flyers? But ever a rotation out of technology, it's going to find its way into energy.
Very interesting.
All right, coming up, the earnings keep rolling in. Shares of Rivian tanking after their results. Those numbers, plus Lucid and SSE as well. And we'll look at some recent insider selling. The execs offloading shares. Who are they, and why our next guest says one of these moves could be cause for concern. The details are ahead. You're watching Fast Money, live from the NASDAQ market site in Times Square. We'll be right back.
NBC.
All right, welcome back to Fast Money, everybody. Stocks staging a late-day rally, closing near their highs of the day. The Dow gaining about 50 points after being down as much as 225. It was a 0.1% gain there. The S&P 500 up about 0.1% too.
And the NASDAQ notching, however, a third straight day of losses down about 0.3%. That, however, still well off the lows of the session. And a few names trading at all-time highs to tell you about. JP Morgan, Toll Brothers, Diamondback Energy,
All in the green, hitting record levels during the session today. Shares of Royal
Caribbean jumping after hours. The company increasing 2024 guidance on accelerating demand in cruising. And another after-hours mover. Shares of Etsy dropping after reporting a miss on earnings, but posting a revenue beat. The company also saying gross merchandise sales for the current quarter would decline in the low single digits. Any thoughts here, Dan, on JP Morgan?
Yeah, it's pretty astounding. You think about the banks had a tough time when rates were going high, right? For that whole period, and it was a net interest margin thing, and then we saw a bunch of issues as it relates to their market health maturity portfolios last year, right? So now the fact that we have rates moving higher, I guess the market is basically saying JP Morgan has no problems. They got all the smaller regionals that had some problems a year ago at this time, right? But then if you juxtapose it to like a Bank of America, which is still down 35% from its highs about 2 years ago, in the start of 2022. It's pretty astounding here. They don't seem to have any problems whether rates are high or low or anywhere in between.
The juggernaut in banking.
All right, coming up, folks, a look. It is a massive recent sales from insiders at Amazon and Meta, and you know who those CEOs or former CEOs are, and what the most can say about stocks and the market. That's next. And some EV earnings around the corner. Shares of Rivian stalling out, down nearly 15% after reporting profits today, or lucid lower as well. The quarterly numbers when Fast Money returns. Group actions. I have offended guys. No, I mean we got a couple minutes now. Talking about Billy Joel songs.
Yeah.
And
I said Billy Joel has as many good songs as he has horrible songs.
Yeah.
And then you said,
We Didn't Start the Fire is a top 5 worst song, not Billy Joel, in the history of mankind.
wow.
And Billy's a fan of the show. I'm sorry, but he knows it's lousy.
Wow.
Sorry.
I beg to differ. Anyhow, what's the one where you tell that riff?
That's that one.
Is that one?
Yeah, that's that one.
That's why I like it. It's lyrically, it's clever, man.
Yeah, well.
All right, let's get back to business
Please.
here. Welcome back to Fast Money. We are getting some headlines off the NVIDIA conference call that are moving the stock. Let's check back in with Christina for the details. Hi, Christina.
Hi, Tyler. Sorry to break the party. Let's talk about NVIDIA CEO Jensen Huang saying, quote, right now on the call, fundamentally, the conditions are excellent for continued growth. Calendar 2025 and beyond. He says he also expects what is being experienced in the United States will, quote, surely be replicated around the globe. NVIDIA CFO was also on the call confirming their product roadmap is on track, saying their H200 chip, which is the next one, is on track to ship in the second quarter of this year. They're saying supply is improving across the board. But the CFO and CEO both warning that we can expect, or they can expect, their next generation products to be supply constraints as demand exceeds supply. So this would imply the B100 AI chip that's supposed to be launched in March. So that I'm interpreting that as you can get the H100, the H200, those are like the previous generations. But be warned, the B100 may take a little bit longer to get once you sign up for that. As for China, demand declined, with NVIDIA saying we have not received licenses to ship restricted products to China, but they have started shipping alternatives that don't require a license. So we know in Q4 data center revenue was hit big time by China weakness, and yet we still saw that 38% sequential growth. So the call is still underway. It's my other ear right now, so listening on that. I'll send it back to you guys.
Fantastic, and I'll be patient about my B100. I won't get too worried about it. All right, meantime, mega-cap insiders making some massive sales recently. Jeff Bezos offloading about 50 million Amazon shares in just the past few weeks, and insiders at Meta and Microsoft also shedding shares say that 5 times fast. These sales are largely planned, but they could they trigger cause for concern? For a closer look inside the world of insider selling, let's bring in Ben Silverman. He's the VP of Research at Verity and host of Insider Data podcast Differentiated. Ben, do these moves raise any red flags for you, or does one raise more red flags than another? And if so, why?
Thanks for having me on, Tyler. Yeah, so one of the moves does, and that's Meta. What's interesting there is Mark Zuckerberg has been selling daily since the beginning of November of last year. Then the stock got higher to over $460 earlier this month, and we suddenly saw an acceleration in that selling. So that type of behavior is a red flag, and it's actually cautious about Meta's valuation because he's doing these daily pattern sales, and then he suddenly goes off pattern and just dramatically accelerates the number of shares he's selling. So that's the type of valuation-oriented selling that we're looking for.
If I am trying to use seller or insider buyer data, am I on firmer ground watching the buys than I am watching the sells?
It's both. So from a macro perspective, insiders are really good buyers. We've seen them buy, the dips and the big events over the last 20 years, whether it be the great financial crisis, the banking crisis 2016, or the COVID pandemic. As sellers, they're not as predictive as a group because we went through a decade-long bull market and there was a ton of insider selling. So you have to break it down to the company-specific level, and you have to start looking at who is doing price-oriented selling. If they're selling all the time, what you're looking for is deviations in selling behavior. You're looking for unusual types of behavior overall. You're looking for this valuation-oriented selling. So Jeff Bezos sells 50 million shares, but he doesn't do any type of price triggers embedded in his Rule 10b5-1 plan. What he's just doing is he's selling the stock over a few-day period, and he's done that over and over for years and years.
So Ben, what can I infer, if anything, about the market's direction from the fact, as you report, that the ratio of sellers to buyers right now is 3.98. That is much higher than the historic ratio of 2.7. Is that in itself an alarming sign?
So right now that ratio is putting insiders on the edge of our radar. We've got about a month left before insider trading windows close for the quarter. So we've got a month to see what insiders are going to do. As we know, it's still earnings season, right? We're still seeing a lot of companies report earnings. And so over the next month, it's going to be really crucial for investors to drill down on the stocks they care about, the individual companies, and see what insiders are doing. Because as the quarter draws to a close, that's when we really start to get that tell. So right now, the insider selling is on the edge of our radar, and it's either going to move off the radar because maybe we get more buying, maybe we get an even out of the selling, or it's going to move closer to the middle of our radar and start raising more red flags.
All right, Ben, thank you very much, Ben Silverman. We appreciate it.
Thank you.
All right, guys. Yeah, it's not a market timing device by any stretch of the imagination, but when the ratio gets to levels like we're seeing now, it should raise a little bit of a red flag. You can say, it's fine, they're selling stock, they're entitled to do so. A lot of these things have been planned, I get it. We're not suggesting they're doing anything wrong, but when the smartest people in the world are selling to the magnitude that we're seeing now, you have to take notice. You might say, good for them, I'm going to buy what they're selling. But a lot of people would say maybe this is an indication that they think the market's getting a little bit ahead of itself.
Very interesting. We'll come back to this one, I'm sure. Coming up, meantime, after hours, EV action shares of Rivian and Lucid Motors getting crushed. After reporting results, we will kick the tires on the EV trade next. Plus, from big short to big long, the sectors and stocks gaining. Moses thinks could hit the jackpot. Moses lead us to the promised land.
And during February, we are celebrating Black Heritage. Here's the VP of Corporate Social Responsibility and DEI at JetBlue.
Our contributions to the world are significant. And you don't know where you're going unless you can look back and see where you come from. And so celebrating Black History Month allows everybody to understand, celebrate, and recognize the rich contributions that African Americans have made in the United States, but that Black people in general have made to the world.